Welcome to KeenVision's Quick View. Today we're going to put our focus on the financial plan and analysis or strategic finance organization. The advancement and utilization of financial performance management technology is a particular passion for myself and Al Martinez, who's joining me, and other team members at KeenVision. Recently, a group of us gathered to explore ways we can do more with FPM technology. Al, I know we were both really inspired by those working design sessions. What were the takeaways or high points for you from that
Yeah,
discussion?
well, I'll give you a little background about myself. Spent 14 years in corporate finance, business operations, led teams from Series A to post-IPO companies. And first off, when I was working at Northrop Grumman Aerospace and Fitbit, I wish I had the solution. Like, just taking a step back, when I was in finance there, we did a lot of margin analysis, specifically contribution margin, by sector and by product. And that was all built manually in Excel, super time consuming, very fragile, very error prone. But we had to constantly update that model, right? So when I was at Northrop Grumman, I was in the unmanned aerial vehicle sector. And at Fitbit, it was early days. So we didn't really have a lot of historicals to go off of to make decisions on investment. So we were like building product, creating new categories, and had no idea if it was going to work or not.
Yeah.
So we had to constantly go back to this model and update it, right, to determine, the leadership would always be like, hey, so where should we invest our money in? Which product is working? Which product is not working? So I'm really excited to jump into this solution. But really the big takeaways for me was getting to a quickly, fully allocated view to dissect and analyze margins.
Yeah.
I think it's what excites me the most. And I think, we were talking about it, Mark, when we were designing the solution was, well, how do we take it to the next level, right? And I think what if scenarios, iterations, very quickly, automatically calculating some of these internal benchmarks, right? To set up nicely on some workflows like S&OP, sales and operations planning, and NPI, new product introduction workflows, I think is what excites me the most.
Yeah, as you're describing this, my background, I spent years doing corporate FP&A in large high-tech space. A lot of change going on in the product and the product mix, and where's profitability, what product lines or families should you keep investing in, just what you're talking about. And then doing a number of years of kind of interim CFO leadership for CPG companies, manufacturing companies. Same thing. You're always looking for where are we making money, and really beyond the margin level. It was okay. What are all the other expenses, the other P&L cost items that relate to doing business with certain customers or relate to certain product lines or channels? Just the ability to take your P&L and twist it or filter it on different dimensions that are very relevant from an operational standpoint was just critical. Anyhow, we can clearly go on and on about this because we spent multiple days camped out just talking about experiences and what we wish we had. So let's talk about what we're gonna do today at a high level. So we're going to take you on a brief tour of an FPM solution from KeenVision that we call Profitability Analytics. This version that we're showing you runs on the Planful platform. At a high level, it's a tool that does what Al and I were just talking about. It takes a P&L across dimensional lines, whether those are customer, product line, channel, region, market, you name it. We even have a client right now that's implementing this application, this solution, and looking at delivery route profitability and how that influences their P&L. So it's really, you define the dimensionality. Just need a pathway on how to get there from a data standpoint. So it's multidimensional. And then it takes your revenue and margin layer, which typically has that type of dimensionality that you're looking for, and merges it with what we call a cost designation or cost allocation process that allows you to take the costs on the rest of your P&L and either allocate them or designate them or direct them or say this gets to these different um, dimensions based off of drivers or rules or however it makes sense. You group the costs up and then user define how you get the costs allocated into that dimensionality. And the net result is a business model, not just usable for reporting, but usable in planning and strategic finance to say, well, what happens? What's the impact if things change? What's the impact if we're able to reduce the cost of this product? What's the impact if this customer's volumes go substantially higher, or pricing impacts or whatnot? So that's really the fundamental concept for profitability analytics. Like I said, Al and I could sit here and go on and on about the process and how we would both use it in our careers at different points. But Al, I think the better thing is just have us stop talking and let you kind of walk people through what this looks like, just as a quick tour type of basis.
Yeah,
Take it.
Yeah, thanks, Mark. So kind of just to summarize what Mark was talking about, right? A lot of times you're going to have that visibility for volume, revenue at a very high level, right? But again, only tells part of the story. You got to take all the other expenses, right, related to your contribution margin, right? So those designation of costs becomes so important. So being able to really intelligently allocate those costs, right? You're talking about distribution costs, freight costs, marketing, right? Other OpEx to get that holistic view of profitability is where we were really focusing in on to help really centralize that right level of detail for your business. To Mark's point, we actually had a couple clients implement this solution. Both were high-tech manufacturing businesses. We took their existing Planful solution, integrated their order pipeline data from their CRM. We grabbed a lot of the revenue and COGS data sets that already had some of this information, and then we flowed it through this custom revenue and margin planning workflow. And then this is connected back into their corporate 3 financial statement model. And for one of the clients, we actually then rippled that through a direct cash flow model report. So it was all kind of ticking and tying for them to do their analysis on. So what we're going to walk you through for today's demonstration are 3 things. One is going to be, we're going to review some examples for designating costs and using drivers. Then we're going to analyze those updates in various reports. And then lastly, we're going to adjust what if scenarios to see the impacts on profitability and compare against various scenarios. So excited for you to show you the product, and let's go ahead and jump into Planful now. At this point, you have already brought in data sets of your volume and revenue at the detailed level you need. Then we're going to layer in any attributions of operating expenses and costs down to the customer, product, channel, or any other segment using a variety of cost designation methods. What this will do is fill in any missing pieces of your margin analysis to make standard contribution operating margin useful to drive insights for each way you view the business. If you're unsure of what cost designation and drivers to use, we will suggest common best practice cost designation methods to help accelerate implementation timelines and to get you using your solution faster. For this use case, we use a mix of channel and GL accounts to allocate expenses related to marketing spend. So quickly taking a look at my drivers here, I have a mix of my national, regional, and gift trade channels. And I need to update my mix to account for the increases in sales and spend related to our national retail chains here. So I'm going to go quickly ahead and make those adjustments to my marketing cost designation assumptions here. Just making sure that ties out to 100. And then go ahead and copy these for all of my different marketing expenses. That will go ahead and store those updates and recalculate any associated cost with marketing to the correct channels and or products and any other segments that you need to provide visibility into. You now have a pre and post view of your P&L and a more detailed look into profitability from gross margin through operating income for each of your segments. The result gives you a full picture of profit by customer, product, channel to enable an array of analytics. You can now provide a more detailed view and analysis of your business to develop key strategies that maximize profitability for future growth. You can also leverage additional attributes in business logic to unlock deeper insights. So for example, I created business logic to dynamically show the top 5 and bottom 5 customers weighted by highest and lowest margins. This allows me to directly take actionable insights to leadership, provide direction to what's working versus what's not working, and helps gut check my model assumptions when updating future growth plans and setting up those profitability targets for the business. As an example, being able to look at my top 5 customers by P&L in a couple clicks, take the average total to create an ideal financial profile for future customers, or set a financial benchmark for any segment of the business. So this will help set the foundation to drive profitability throughout the organization and help other business areas. For example, setting thresholds for deal desk approvals or providing supply chain financial targets to base negotiations on when they need to negotiate more favorable terms or build out a new product. I can also start to perform more detailed what-if analysis in real time to continue to push profitability in strategic thought leadership. First, you copy over actuals or a scenario into a new what-if to adjust. This copies all of your assumptions and results such as volume, revenue, ASPs, average costs, and other margin assumptions. Then we're able to override where you see big gaps in the strategic direction of the business. For example, I want to increase production volume on a couple products given the higher demand received from the market versus the available supply from last quarter. So another example, I want to increase ASPs related to my high-end brands, as the next production batch I know has more premium features that will receive a higher perceived value in the market, justifying that higher price. So I'm going to go ahead and find those retailers really quickly, make those adjustments. And I know I will have some fallout and lose on some sales related to this price hike. So I'm going to go ahead and account for that as well. I also know that we can reduce other retailers that we know have unfavorable margins and we're about to end agreements with. And there could be some other retailers that, due to cannibalization of other new products that we're about to release, will have impacts on those volumes as well. My last example, we know we are about to complete a renewal for manufacturing agreement on this product family, and there is a more competitive pricing available. So we're going ahead and reduce some average costs related to those retailers that will be impacted by this. Now I'll go ahead and save off my changes, and we will recalculate volume, ASP, average costs, and that'll flow into our 3 financial statements. We'll show that as an example on the P&L. Now you can answer those challenging questions from leadership or investors without delay. Compare scenarios, run quick what-if exercises to understand financial impacts on decisions being made. You can also directly integrate into your reporting and analytics footprint, either with Planpool or third-party applications such as Power BI or Workiva. One of our existing clients at a materials manufacturing business took their aggregated 3-year plan workflow and with our solution, turned it into a detailed SKU-level planning process to analyze profitability and margin analysis. So in summary, KeenVision can deploy the right level of detail to increase visibility into your profitability margins, automating workflows to free up time to the necessary what-if analysis to ensure you're assessing your company's profitability quickly and accurately. If you'd like to learn more about the solution or any other advanced financial planning and analytics solutions we offer, you can email us at info@kvcfo.com, visit our LinkedIn page, website, or reach out to your contact from KeenVision for more information. Thanks for watching. Have a good rest of your day. See you next time.